Vanakkam. Today, I am going to speak about FEMA 1999 and with a specific topic called trade credit. An importer, whenever he wants to import capital goods or non-capital goods, he need finance. What are the rules to be followed to avoid to purchase that capital goods or non-capital goods? This will be covered under the topic called trade credit. Before going to the presentation, I want to give one very important thing, a disclaimer that the views expressed by me here is my view. A clear understanding of the matters discussed, I request you to please go through FEMA 1999. I am not responsible for any wrong interpretation. With this disclaimer, I am presenting the subject for your easy understanding. And welcome to the topic trade credit. What is a trade credit? It's a credit extended by overseas suppliers, bank, and financial institutions, other permitted recognized lenders with a maturity and this is used for the purpose of purchase of import of capital goods and non-capital goods, and this has to be carried out with the permissible activities as per the foreign trade policy of the government of India. And this is being trade credit is being regulated by the RBI under the powers given in FEMA 1999. As it is a capital account transactions, the trade credit is not really permissible. So it's a very, very important, not only here, if any transaction comes under the category of a capital account transaction, is not freely permissible. It is subject to regulations, rules, supervision, and everything. Here, trade credit, it can be done in the form of freely convertible foreign currency or in Indian rupee. This is a very, very important thing. And trade credit can be for buyer's credit as well as for the supplier's credit. And who is eligible to receive the trade credit? That is, eligible borrower is the person resident in India. He should be resident in India who acts as an importer. So he is an importer who imports capital goods or non-capital goods, but the very, very important condition is that the person should be a resident in India. Then there is a ceiling to avail the trade credit. So here, if he is importing oil, gas, refining and marketing, airline and shipping companies in import, per transaction it is, you can import up to US dollar of 150 million or equivalent. And for others, other than that, for any other import transaction, that is per transaction, you can import trade credit up to 50 million US dollars or equivalent. What is equivalent? Equivalent is, suppose if you are importing the goods from UK, pounds concept comes into the picture. So to the extent of US dollars, pounds, you have to calculate the pounds value and you can import it. And what is the cost? All the cost ceiling. What is the ceiling that is there? That is, when you import, you have to pay the interest. That is, everybody expects benchmark rate and 250 BPS. So that is basic points. So here, benchmark rate means it's a minimum rate that the investors expect. What is a minimum rate? That suppose even if it is 10% or 11%, 8% plus 2.5% is basic points you have to add. So that is the all the cost ceiling. That is the maximum extent you can go up to that. And trade credit can also be done in Indian rupee. Trade credit can also be done in for free FCFC, that is freely convertible foreign currency, as well as trade credit can also be done in INR. If that is the case, then RBI will fix the interest rate. This is a very, very important thing. But for if the trade credit is done in the foreign currency, foreign exchange, then the benchmark rate plus 2.5%. And what are the list of all-in costs? That is, it includes rate of interest, other fees, expenses, charges, guarantee fees, export credit agency charges, whether that is being paid in foreign currency or foreign exchange or in INR, Indian rupee. But it excludes commitment fee and withholding tax fee. And who are all called as recognized lenders? This is a very, very important. Who is eligible to give the trade credit to a person resident in India who acts as an importer? That is, towards supplier credit, the supplier himself, they can give the goods on credit, but that supplier should be located outside India. This is a basic thing. Next thing is for buyer's credit, banks, financial institutions, foreign equity holders located outside India, and financial institutions, which is covered by the concept of IFC. But IFC concept is it should be within the India. So they are called as, they are also eligible to finance the trade credit, but they are also called as recognized lenders. And lenders have to follow the prudential norms issued by the concerned regulatory departments of RBI. Whether the participation is from Indian banks or non-banking financial companies who act as lenders. So that means they have, all the lenders, they have to follow the prudential guidelines issued by the Reserve Bank of India. And those Indian banks which have foreign branch can, if they want to lend, suppose foreign branches of Indian banks, they want to lend trade credit, then they have to lend only in FCA, that is freely convertible foreign currency. TC means trade credit. Now, this trade credit has to be returned. What is the period? What is the period within which this trade credit has to be returned? So, for import of capital goods, it is up to 3 years from the date of shipment. Up to 3 years from the date of shipment, the TC has to be, that is trade credit has to be returned. But import of non-capital goods, it is allowed only up to 1 year for operating cycle, whichever is less. Suppose if it is less than 1 year, then that period you have to take for with reference to non-capital goods. Here, shipyards and shipbuilders, if they import, then the period of repayment, period of trade credit is up to 3 years for import of non-capital goods. Capital goods, it is 3 years. For non-capital goods, it is 1 year. And if it is being imported by shipyards and shipbuilders towards non-capital goods, it is 3 years. Only for shipyards and shipbuilders, it is you can take up to repay up to 3 years. And now you have got the trade credit in one currency. Can you convert or can you change the currency? Yes, it is possible. So exchange rate, but you have to calculate the exchange rate. So what is the exchange rate? So the date on which you entered into the agreement. What is the foreign currency rate that is prevailing in the market? That is called as exchange rate. So freely convertible foreign currency into INR to trade credit. That is, you have got a foreign exchange, you have to convert into rupee in India, because every transaction in India you have to carry out only in rupee. So the date on which you convert, what is the market rate with reference to the dollar or pound, that has to be taken as the base. But if it is for Indian rupee to trade credit, the exchange rate prevailed on the date of settlement. But can we do the hedging? Yes, it is possible. Hedging is also possible in trade credit. In hedging, they want to play the game very safely. But this is also possible for both for freely convertible foreign currency and INR. But everything is subject to sectoral or regulator guidelines of RBI. And can we change the currency from one foreign currency to another foreign currency or to Indian rupee? So in trade credit, suppose we have borrowed the money in dollar, and can you change the trade credit into pounds? Yes, it is permitted, but everything is subject to RBI guidelines. In case if you have got the money in foreign currency in trade credit, if you want to convert in INR, yes, that is also permitted. But if you got the money in INR, can you convert that into foreign currency? No, it is not permitted. This is a basic thing that you have to do. So foreign currency to foreign currency, it is so you can change it. Foreign currency to INR, you can change it, but from Indian rupee to foreign currency, it is not permitted. Here, if you want to avail trade credit for special economic zone, free trade and warehousing zone, and a domestic tariff area, what are the things that you have to follow? Yes, trade credit can be raised for these zones by capital and non-capital goods. This can be done within the special economic zone and free trade and warehousing zone, or from different SEZ and FTWH also you can do it. And everything is subject to RBI guidelines. Not only here, anything, if it is related to capital goods, because it is a capital asset. So everything you have to be very, very careful, and it is with reference to RBI guidelines. And domestic tariff area, you can use within domestic area also you can buy capital goods and non-capital goods from the units situated in special economic zone. Here, FTWH, that is foreign free trade and warehousing zone, is a part of SEZ. So that is also possible. So next one is there is one date called as trade credit date. What is the trade credit date? It is the date of transfer of ownership of goods in SEZ. Reference to SEZ. Because if it is with the direct purchase, then the date on which you have received the goods, that is the date of ownership. But here it is the date, if it is done within the SEZ, the date of transfer of ownership of goods in SEZ is called as trade credit date. So what is the security that you have to give? Here, they have divided the concept into bank guarantee and others. So now what are the things that you have to be very, very careful? So RBI specifies the security for trade credit. This is a very, very important. So you cannot take the trade credit, security directly, but bank guarantee is given by AD. AD means authorized dealer in favor of the overseas lender. So this is very, very important. That means only the authorized dealer is entitled to give the security towards the overseas lender in the form of bank guarantee, but that bank guarantee value should not exceed the trade credit. Suppose if the trade credit is say $20 lakh, then the bank guarantee should not exceed $20 lakh. And the maximum period of it should not, the bank guarantee also should not go beyond the maximum period of repayment for trade. What is that? For capital goods it is 3 years, and for non-capital goods it is 1 year. So the bank guarantee should be within that period, and it should be secured by overseas guarantee. Suppose if any of the foreign banks, they are issuing the bank guarantee, yes, it is also possible. And if they are the branches or subsidiaries of Indian Bank, they can also issue the overseas guarantee. But these types of overseas guarantees are subject to compliance with the provisions relating to guarantees and co-acceptance regulations issued by RBI. It's very, very simple. These guarantees are also subject to the supervision or control of Reserve Bank of India. And now we have seen the bank guarantee security. Now we are moving to movable, immovable financial assets which have been considered as the security. So importer can offer the following properties as securities towards trade credit. That is movable assets, which includes financial assets, immovable assets, which excludes the lands in SEZ. So that means the lands, if you are owning the SEZ lands, it will not be taken as security towards trade credit. And corporate and personal guarantee, as usual, a corporate guarantee can also be taken, personal guarantee can also be taken, but all guarantees are subject to RBI approval. Authorized dealer gives permission to create charge on the securities, because if any any property is being given as security, a charge has to be created on the property. But for that, authorized dealer has to give his permission to create the charge on the security offered, whether it's a movable or immovable, but as well as accept corporate or personal guarantee. But everything is subject to the conditions imposed by the Reserve Bank of India. And now the reporting format. So when you have to report, so the authorized dealer has given some trade credit, and they have to give the report to Reserve Bank of India. They have to submit the report once in a month and every quarter also. Suppose in the monthly report, on which date you have to submit, that is within the 10 days of the following next month, the authorized dealer has to submit the report to Reserve Bank of India. In that report, the authorized dealer has to cover the drawal of the limit, utilization of the limit, and repayment of repayment terms and conditions. Any repayment is done towards trade credit by all its branches. Suppose not only in branches, in all branches, they have to pull together, and in a consolidated manner, they have to submit the report to Reserve Bank of India. And each trade credit may be given unique identification number, just like every transaction, because each trade credit has to be identified, has to be given separate unique identification number, and this number has to be allotted by the authorized dealer. And the supplier credit, what is the extent of the credit? So it is 180 days. Suppose if it exceeds 180 days, up to 1 year or 3 years, 1 year is towards the non-capital goods and 3 years are towards the capital goods. This has to be taken from the date of shipment for capital non-capital goods and report the same thing by the authorized dealer to Reserve Bank of India on in its monthly report. In case if there is any settlement needs to be done beyond the due dates, yes, authorized dealer gives permission, and this permission can also be given by the Reserve Bank of India, but they have to form their own procedure. Just like suppose if the dues exceeded the limit of say 3 years, then that amount has to be recovered. So that is also permitted. So the delay can be approved by Reserve Bank of India as well as the authorized dealer. And if they are submitting the report on quarterly basis, yeah, bank guarantee is covered. So authorized dealer has to report about the bank guarantee for trade credit issued by all its branches in a consolidated statement to Reserve Bank of India. And this is being covered by the RBI's prescribed form. All the reports format is being covered by RBI Fed Master Direction number 18/2015-16 dated 1/1/2016. In the reporting class, the forms are there. Based on that, they have to, the authorized dealers, they have to submit the report to the Reserve Bank of India. What are the compliance procedures? So who is responsible? The authorized dealer is responsible with reference to trade credit policy. And they have all the importers, they have to follow that policy, and authorized dealers authorized dealer has to follow all the compliance procedures as laid down in FEMA. Normally RBI prescribed no format. There is no format and trade credit arrangements and loan agreements, and it is a duty of the authorized dealer to form a own TC arrangement, that is trade credit arrangement form and the loan agreements form towards the documentation. So it is a very clear indication that Reserve Bank of India has not issued any prescribed format with reference to trade credit arrangement and loan agreements, and there is a duty of the authorized dealer to ensure that there is no double financing during the trade credit. So trade credit, the banker, he has not give a separate loan for the same product for same capital goods, and the trade credit should not be given simultaneously. That means it is a duty of the authorized dealer to ensure that there is no double financing. And general information about the trade credit is, so borrowing and lending between two residents, in Indian rupee, INR, the provisions of FEMA is not applicable. This is very, very common. If there is any lending between resident and resident, between one resident to another resident in Indian rupee, FEMA provisions are not applicable. But if it is lent between resident and non-resident, then FEMA provisions are applicable. This is a general thing I want to convey to you. These things you have to remember. And the same concept is applicable for the transaction between the eligible borrowers or importers and eligible lenders, either in FCFC, that is freely convertible foreign currency, and INR. So any transaction between two residents in Indian rupee, FEMA is not applicable. But if it is done between resident and non-resident, and that too in FCNR or INR, then all the FEMA provisions are applicable. With this, I am just closing the highlights of trade credit. And I thank you once again very much. I thank you very much once again for patiently hearing this program. Nandri, Vanakkam.